So, if you've dared to look at your portfolio lately, you've probably seen it a sea of red. It feels like everything is dropping at once, especially in the worlds of crypto and tech. But is this just a coincidence, or are these two markets way more connected than we thought? Today, we're going to unpack exactly why these seemingly separate worlds are falling together in lockstep.
And yeah, when I say falling, I really mean it. From its recent peak, Bitcoin has absolutely plummeted over 25%. At the same time, the tech-heavy NASDAQ is down a pretty painful 15%. Look, this is not just some small dip, it's a major, synchronized downturn that has wiped out staggering amounts of value. The numbers here tell the story loud and clear. A huge market shift is happening right now.
So this all leads us to the big question, right? Why is everything falling all at the same time? Is it just bad luck, or is there a much deeper force at play here? Let's dig in and break down the mechanics behind this whole market move piece by piece.
To really get this, we have to zoom out and look at the big picture. The first and maybe most important piece of the puzzle is the entire market's mood. It's shifted into what everyone is calling a risk-off environment. And believe me, this one concept explains so much of what's going on.
So, what in the world is risk-off? Well, imagine the entire market as one single, really nervous investor. When there's a lot of uncertainty out there, things like rising interest rates or geopolitical drama, that investor gets spooked. They start selling off their riskiest stuff and run for cover in safer assets. It's basically a collective flight to safety, and those high-flying, speculative investments are always the first to get tossed overboard.
So what's actually causing this whole risk-off mood? Well, it really boils down to four key things. First up, we've got a massive reality check on those sky-high tech valuations we've been seeing. Second, there's just less money or liquidity sloshing around the system. Third, you have this huge wave of forced selling from traders who got over-leveraged. They borrowed way too much. And finally, there's just massive uncertainty about what central banks are going to do next, and that is everyone playing defense.
Okay, so that explains the general market jitters, but it brings up another question. Why is crypto getting hit so much harder than everything else? To answer that, we have to dive into the unique, and let's be honest, often brutal mechanics of the crypto market itself, where a very special kind of cascade effect can take over.
This quote right here is the perfect way to think about it. If all risky assets are an iceberg, crypto is the very, very tip. So when the tide of investor confidence goes out, that tip is the first part to be exposed. In a risk-off world, crypto is usually the first asset to be sold, and it gets sold off the most aggressively.
Now, a huge reason for crypto's dramatic price falls is something called leveraged liquidation. It sounds super complex, but the idea is actually pretty simple. Traders borrow money, that's the leverage, to make bigger bets. But if the price drops, the exchanges can automatically force sell their crypto to make sure the loan gets paid back. And this can set off a devastating chain reaction.
And here is exactly how that cascade, that downward spiral, begins. It starts with a small, unexpected price dip. That dip triggers automatic sell-offs. Those are the margin calls. This forced selling then pushes the price down even further, which, you guessed it, triggers even more forced selling from other traders. A small little downturn can quickly snowball into a full-blown market crash. It's a vicious, self-reinforcing loop.
And you have to remember, this isn't happening in a vacuum. The market is still carrying the scars from the 2022 crypto winter. The collapse of huge projects like Luna and firms like Celsius and Three Arrows Capital, that created a massive liquidity crisis, and it totally shattered trust. Those events left the entire system feeling fragile, and now investors are on high alert, watching to see if history is about to repeat itself.
Okay, so we've covered the macro environment, and we've talked about the crypto-specific panic. But that still doesn't totally explain why tech stocks are falling right alongside crypto. And this brings us to the final and maybe the most crucial piece of the puzzle, this surprising and growing connection between these two worlds.
I mean, when you put them side by side, the similarities are pretty striking. Big investors now treat both Bitcoin and high-growth tech stocks as speculative growth assets. Their value is all based on future potential, not so much on current profits. And this makes both of them extremely sensitive to changes in interest rates, because rates directly affect how investors calculate the value of those future earnings. And here it is. This is the crucial takeaway. For a while now, crypto has been behaving less like some kind of digital gold and a lot more like a high beta tech stock. Now, high beta is just a fancy way of saying it follows the tech sector's direction, but with much, much bigger swings. So if tech stocks catch a cold, crypto gets the flu. It just amplifies every single move, both on the way up and on the way down. Okay, so now we understand the why. The obvious next question is, so what? Where do things go from here? Let's take a look at the key signals that you should be watching to figure out if this cool down is going to continue or if a reversal might be just around the corner.
All right, here are 4 critical things to keep your eyes on. First, money flows. Are big investors putting money in or pulling it out of those major Bitcoin ETFs? Second, big tech earnings. What companies like Nvidia and Google say about the future is going to set the tone for the whole sector. Third, liquidation metrics on the crypto exchanges. Watch out for any big spikes and forced selling. And finally, the big one, macro data and any announcements from the Fed. That's what ultimately sets the risk appetite for the entire market.
And all of this leaves us with the one big question that's on everybody's mind. Is this just a healthy market reset? You know, a necessary cool down for assets that got way too hot? Or is this the beginning of a much deeper, longer freeze for both tech and crypto? The indicators we just talked about are going to give us the clues. But for now, the market waits. So I'll leave you with this to chew on. What do you think comes next?